Last week, Fannie Mae, Freddie Mac, and the FHA announced loan forbearance, allowing borrowers impacted by coronavirus to delay their monthly mortgage payments. That's a big help for borrowers, but here's the catch. The companies that collect those payments, the servicers, they still have to pay the investors who own those loans in mortgage-backed bonds, or MBS. Servicers can handle some delinquencies, but nothing like we are likely about to see. The Mortgage Bankers Association sent a letter to the Federal Reserve and the Treasury late yesterday saying the burden on servicers could top $100 billion, which those services just don't have.
Nobody predicted the demands that this would place on servicers. So they need an ability to have the liquidity to make it happen. And if there's not some kind of ability through a liquidity facility, then the servicers won't be able to meet their obligations to the investors, and the whole process will break down.
So the services could essentially go bankrupt, taking the whole housing finance system down with it. Now, just a note, in the last hour, FHFA announced it would allow multifamily mortgage borrowers to delay their monthly payments as long as they don't evict any tenants. So you're going to have a backlog of payments going there as well. Tyler?
Why, Diana, are these services in so much more trouble now, even than they were during the subprime crisis?
Well, certainly some servicers did go out of business during the subprime crisis, but remember, that happened over several years. You had a wave of borrowers going delinquent over many years. This is going to happen all at once. We're talking in a matter of months. We're going to see those loan payments stopped at the end of April, May, June in huge numbers that we just didn't see during the subprime crisis.
This is really a ripple effect, isn't it, Diana? In other words, we're focused, and maybe rightly, on a lot of the consumer-facing companies, whether they're airlines or restaurants or stores, retails, and so forth. But here is sort of the back office behind the curtain that it's going to affect heavily.
Absolutely. I mean, you look at these servicers, these are the people that when you write out your monthly mortgage payment, you send it to them and they do all the busy work and get it to the investors and they keep the mortgage finance system running. They simply just aren't equipped to deal with this many drops in payments. They don't have that kind of cash. Now, if they could get that liquidity, that cash from Treasury, Federal Reserve, they could keep it going. And that is the expectation, the hope from the Mortgage Bankers Association. We've seen the Fed pour billions of dollars into buying mortgage-backed bonds. So that's probably what they're going to have to do in this case.